Good evening, everybody, and welcome to another edition of Live Market Analysis, coming to you from sunny Perth. Over here, it's freezing. Over here, still waiting for spring to spring. Sorry, I couldn't be with you last week. I was over in sunny Sydney. Not so sunny Sydney either. It was bloody horrible, raining, wind, everything. Monday, Tuesday, Wednesday for LifeWire Live, which is a live event that the company I work for does each year, and it was lots of fun there, listening to all the fund managers speak and talk about their ideas and pitch their ideas. And I mean that quite genuinely. It's quite fascinating. Victor Schwetz was definitely a highlight. I don't know if you've heard of him, but definitely look him up. He's a Macquarie sort of big ideas guy. But I digress. Apologies for the late notice in not being able to be with you, but I'll make up for that tonight by doing all the offline requests in tonight's session also. Before we do that, of course, we must talk about the disclaimer, which says that everything we're going to discuss tonight is general in nature, is not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this very general information, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. The rest of the stuff is pretty straightforward. I think the most important bit there is trading is risky. You'll inevitably endure losses at some stage, and ultimately it's you and not I is responsible for everything that you choose to do. Tonight is very simple, as it always is. You ask questions, I'll try and give you my best technical analysis reader. It could be stocks, bonds, crypto, here or anywhere else around the world, indices, Forex, you name it, I'm happy to look at it. It could be anything about trading, just the 3 M's, money, management, mindset, and methodology, of course. Let us, whilst those requests are coming through, head over to the AMI broker screen, as we like to do, and kick off with our portfolio management model. So there's picking individual trades, and I think a lot of traders think that's all you have to do, just pick the right stocks. They go up 10 times, you make a bunch of money. But for me, overriding that entire process is how much of my total capital I can risk at any one point in time. And when the market is trending strongly, I'm allowed to risk more. Makes a lot of sense. When the market is not trending strongly, this model forces me to risk less and therefore by definition have more in cash. Well, there's no need for cash at this point in time, quite literally, because my model suggests on the Nasdaq composite on screen to be full risk position. And that means you can, if you want to, you don't have to, but if you want to, you can invest all of your capital into, if you're investing in the US stocks, of course. What does that mean for the Aussie market? It doesn't mean anything, because you're going to have a different benchmark for your Australian investing. If you're investing in Japan or wherever, you'd have a different benchmark. Again, you have the Nikkei 225. But for your US investing, because we are double green on the short-term trend and the long-term trend, they're the trend ribbons. Price action is higher peaks and high troughs, which just means, high peaks, you're removing supply. High troughs means you're reinforcing demand on the way up. That's usually a good sign of demand side control. And a predominance of white candles. Just, the way you get white candles, ladies and gentlemen, is if there are these pervasive buy orders in the system. So market might start lower in a day because, I don't know, Jerome Powell said something, Trump said something. There was a weak data point, and it starts low, and everybody thinks, oh, well, this has got to be the big pullback, and then it just starts creeping up and up and up. You've probably, tuned into your favourite online news service, and you see that intraday chart of the Nasdaq, and it just, it starts low, or it might start high, go low, and then it just creeps all the way back up to the end of trading. Those are programmed buy orders, and that just means that there is a pile of cash trying to get into the market. It's pervasive. It's just sitting there, and it can't get in all at once because there's just not the liquidity to do so. So it has to buy those dips, and it has to buy in small parcels during the day to get set. Now, on occasion, you're going to find that there are active fund managers. Not to say that these aren't active, but they often, to be fair, tend to be more passive flows. But active fund managers will use those program buy orders as well. But every now and then you will have a big black candle, which just tells you that those are generally active managers coming in and making a call on their cash. And if those are too big, they could turn the passive tide as well, or turn the passive off, and we start to get changes in the price action trends and candles. So what I'm explaining here is sort of some of the story behind why I use these very indicators. They're not there by accident. It's not just, white candles, that's good. although you can keep it as simple as that if you like. But these technical signals are really, for me, evidence of some of these underlying real-world supply-demand interactions. Bottom line, full risk position here, isn't it? No reason not to be. Let us head over to Australia because obviously people listening to me tend to be investing in the Aussie market. I'm 2/3 risk position here. Obviously, we didn't talk last week, and we might not have talked about it the week before because I think this black candle here that caused it, that is moved beneath the dynamic demand of that short-term uptrend ribbon. That's a no-no for me. Closed beneath it, of course, but the size of the candle, just look at the magnitude of that candle compared to the other ones. The fact it was just, so complete in terms of opening at the high and closing at the low, forced me to move to a 2/3 risk position here. And you tend not to get there all at once. That's usually impossible, and you make those decisions, I guess, in a very practical way. So if you are still on the way there, you might be, still 90% invested. I'm not too fussed by that. You just get there in your own time. I don't think there's any major rush to do so. And if anything, we'll probably, maybe, I don't know, the technicals seem to be firming up a little bit. If you read my wrap on market index, you know that I was not impressed by these 2 days at all. And I think that's been vindicated because, it really hasn't got going since then. This is a good day here. What was that? Friday. And then today looks subdued, but actually a pretty good day. So I think in combination there, Friday and today's price action is reassuring that we can actually move back into that short-term uptrend to close above 1881 with a nice, decent sized white candle. High close would seal the deal for me. And then happy to move back to that full risk position. I think that's where we're going to go next, and not to like a 50-50 or a 1/3 risk position. That would be my view. Of course, the long-term trend is still very much up. And you could stay, fully invested, I guess, if you wanted to have a few shorts in the system to maybe balance things out. That's another way to go about it. Let us do the whip around the grounds, where we try and find reasons in other markets that would push us off this thesis of full risk position in 2/3 in Australia. Not finding it in the Russell 2000. I think that's a very healthy looking chart. We're looking here at the, I guess, the heart of corporate America, that is smaller, quote unquote, smaller capitalisation stocks. So I think they're generally bigger than most of the entire Australian blue chip universe. But chugging along really nicely. And when you see the Russell doing that sort of stuff, I know Friday wasn't ideal, but when you see the Russell generally doing that sort of stuff, US equities are on a good, firm path, I would suggest. We'll look at bonds and talk about interest rates in a little while. But not a problem there for me. Heading to Europe, no problems here. Look, that's not shoot the lights out, is it, on the French market? But it doesn't have to be. We're just looking for red flags. Not shoot the lights out there in Europe, but not a red flag. UK is fine. Spain is fine. Ideally, we do see that commensurate growth around the world, because it just speaks to this sort of pervasive risk-taking desire among global investors. Moving back to Asia, that looks very strong there on the Hang Seng. That's impressive. Nikkei looks fantastic. Nifty 50 looks fine. Shanghai still looks very, very strong. We've been talking about this for a few weeks. And the A50 there, also in China, looking very, very good. A very, very quick whip around the grounds on the Aussie market, simply because if you're investing over here, we're so beholden to these sectoral and macro themes, and you'll just see that banks will be strong for 6 months or 12 months, and then at the expense of resources and vice versa. And the fund managers here play their favourites. Discretionary still looks strong, no issues there. We're seeing a rolling over of energy. That's disturbing. Financials still strong, no issues there. Gold, very, very strong. I know pullback to date's one of those ASX gold style pullbacks where you don't just go down a little bit, you pull back a lot, and the gold price hasn't changed, but that's fairly typical. Thin market, one active fund manager wants to take some profits and stocks get hit. Healthcare's in real trouble. Information technology, I think, is losing some momentum. I'd be a little bit concerned about that one. Resources, okay, but also losing momentum, but not as concerned just yet. Property still looks quite solid. Staples, no point even commenting on that. That's a few dividends there, I think, hurting the old telecommunications, but that is starting to neutralise. Utilities neutralising as well, and that's all ordinary. So not a clean slate there by any stretch of the imagination for the Aussie market. That reflects, obviously, some of the problems we saw in the benchmark earlier on. Let us now head over to the base metals, where we are seeing some green shoots. Hooray, hooray, happy days. Finally, look at that, on aluminium starting to turn higher. I keep saying, if we've, what's good for stocks, of course, is a strong global economy, and that's often predicated, I guess, by, not predicated, is that the right word? Well, these tend to move in advance of that strength, to be fair, because traders here are predicting. So that's roughly a fair statement, predicated by moves here in London metals. Aluminium turning up, copper turning up. That's starting to look quite interesting. We'll look at iron ore in a second. Actually, you can't see the list that's underneath me, so I don't need to say that. Nickel not turning up, but we're not expecting that to anytime soon, are we? Lead has neutralised, tin turning a little bit higher, and zinc turning a little bit higher. So we have, 4 of those base metals actually starting to look pretty good. So that is encouraging. Let's have a quick look at the lithium carbonate chart, which of course, if you follow me on X/Twitter, you will get each day. And for all intents and purposes, I think a resumption of the long-term downtrend here. It's not what you want to hear, I know, and I'm disappointed. I'm genuinely disappointed as well. But it's, I don't make the candles do. I don't make the chart. It is what it is. Now, it's a few decent trading sessions here. Actually, that little gap lower seems really bad, but I think a decent candle logged there on some above average volume. It's been pretty quiet since then. And for me, I know we're limping back up, but I can't help but think we're just waiting for the next big hit, and it's probably going to come in that long-term trend ribbon. My bias has switched here, but happy to entertain the hope that all is not lost, but I fear it might be. And I've said here, look, I don't think it's going to go down below 60,000 again and to go even lower in this 3-odd-year bear market. But I have set a bump along the bottom. I think we've kind of found our balance here. I just don't think it's going to go straight back up and reverse the horrific declines that it had, 90% declines in this market. Let us quickly head over to the trading view screen where I have, it's working. I'm just surprised that it's working, that's all. So this is Firefox, obviously. There we go, that is, I'm surprised it is working good. Where we're not going to look at Amazon, which just happens to be the last thing on screen. We're going to head over here and have a look at the rest of the precious metals here. Silver futures looking very, very strong. One of my favourite charts at the moment. No reason not to stay the course on that one. Just looking at these for interest. Looks half decent there. Platinum, palladium, okay. Gold, of course, as I said, hasn't pulled back. And we have seen that sharper pullback in the Aussie gold sector. But this still looks very, very strong. No issues on that one. High-grade copper, I think we can forget looking at this one. Look at the London one. This one is too caught up in what's going on with tariffs. Iron ore looks fine, mirroring some of that strength in the Chinese stock indices, despite actually some really terrible Chinese data out today. I don't know if you caught the data dump. Again, check market wrap, evening wrap for the details there, but all of those key metrics came in below average, below forecast and lower than their previous. Uranium, look, it's looking better. Not shooting the lights out, but looking better. And I think, hopefully can hold that short-term uptrend ribbon and turn higher again. Natural gas looking pretty awful, as is most of the energy complex there. Brent crude flat, but could potentially break. And then we've got a substantial break lower in thermal coal, heading back towards 100, and the resumption of short and long-term downtrends in coking coal. Before we finish here, let us head over to the bond market, where later this week we will have an interest rate decision from the US Federal Reserve. Markets are factoring in at least a 25 basis point cut, but working odds on a 50 basis point cut. Certainly, once we get the 25, I do believe that's a lock. It will, at worst, be setting us up for a quick further 25 basis point cut, and probably jaw-boning of even looser monetary policy down the track. And that is why we're seeing those US 10s coming down. 2s coming down. The 10s are also coming down there, and the 30s are coming down as well, breaking what was a bit of a scary sort of uptrend before, and we don't want to see these go up too much. Firstly, because they, US mortgages are pegged largely to this rate, 10s and 30s, and of course the higher these rates, the less disposable income Americans have, but also because of the inverse relationship between bond yields and bond prices. When bond yields are heading up, as they were here above 5%, means bond prices are going down. It means the global investment community are selling US bonds, and that's disturbing. So we're seeing some rectification of that. Is there anything that's really worrying me in these bond market setups? Mostly no. The rates are falling because of expectations of Fed cuts. The US economy doesn't appear to be falling off a cliff at this stage. It's certainly slowing. It's certainly growing, I think, below average, but it's okay, quote unquote okay at this stage. And of course, many things can still happen. But I think lower rates with a US economy that's not falling off a cliff generally tends to be good for stocks. And we have seen some steepening in the 2s, 10s, which suggests that things aren't all as bad as you think, that they're basically suggesting that interest rate cuts will then stimulate the economy. You'll get growth down the track. If I see something really bad in here, I'll let you know. We also have a BOJ decision. They're largely expected to be on hold. That's probably indicated there in the 2s. We've had talk about sovereign debt crises in France, and remembering, of course, that inverse relationship. So if you're selling European bonds, and I know France, the French bonds have their own yields. Not that I can find them on TradingView, but I expect they do. These are mainly the German ones here, but there will be some contagion if France has any issues. I don't think they will. I think that will be dealt with. But we are seeing obviously creeping up here in those yields to all of 2%, but certainly heading in a different direction to those US rates. And I am going to guess, all things considered, you would think that the US dollar is therefore depreciating against the euro, is it? I don't know. I haven't looked at this chart for a very long time, so let's go check that one out. And the euro is appreciating, yes, against the US dollar. So actually potentially shaping for a pretty decent breakout there, because obviously if you're getting a higher yield, relatively speaking, as in Europe, than you are in the US, then that favours the euro. And you might say, oh, well, the US still has a higher yield cut. I know, but money's got to shift to adapt to the fact that the differential is closing. That's more likely to be what it's about. I'm just curious here now. I'm just looking at charts. Well, there you go. That's kind of telling the story of US rates and the end of US exceptionalism. Ask ChatGPT 5 what that means. Hey, while we're here, let's check out Bitcoin. Looks okay, nothing special. And Ethereum looks pretty good, but still not needing any risk adjustment right now. Okay, let us head over to Amy Broker. I'm going to make sure that you're all still with me and there are no major emergencies in the messages. And it doesn't look like that. You're over that way, and the offline requests are over that way. So let's get into the offline requests. And again, part and parcel of not being around last week, we've got a little bit of catch up to do. So I'm going to start with Mick, who's got ABB from last week. Let me zoom that to normal. I might actually zoom it a little bit. And last time we looked at it, we said FRP plus 1/3 on the next demand side candle, which I suspect would have been that one. I certainly featured on that day. I might have run it as a, certainly in the shortlist on that day. I think I ran it as a feature also. And probably ran it on a feature on that day and only just stopped short of running it as a feature today. Just a couple of little shadows there, that's all, but it easily could have been a feature. So that implies the fact I'm talking about it for a potential feature means we just copy and paste that. So if you've got it, I can't see any reason not to have a full risk position. And if you don't have it, I'm still considering it for adding risk, assuming it's the best thing you can do with your money on any particular day. So that one's nice and easy. I like those ones. Nice one to start off with. TNE Technology 1. This one's quite easy too, Mick, I think, because From memory, we might have even talked about this before, not that long ago, and said minus a third on that day in the zero risk position. So with the short-term downtrend, you can see that the pink ribbon here, lower peaks and lower troughs. I know there's some half decent candles sort of coming in close to the long-term uptrend ribbon we were making about May. I don't know, we're not there yet. I don't think I really need to do anything here. So I think I just really, much like the last one, isn't it? Just copy and paste and just go zero risk position. I can't see any reason to have any risk on Technology One. Some people might say, Carl, it's a great company, it's got great fundamentals. Oh, you should see the growth, the PEG ratio, Carl. Oh my gosh. And I'd say, look, that's wonderful. But you keep talking. I'm just going to head over here and do some Duolingo on my phone because I don't care about those things. I only care about whether we're seeing coordinated demand side control in short, long-term trends, price action candles, and we're not seeing that yet. Happy to buy it if it starts to head up, but not just now. So pass for me, and CAT, which is Catapult, starting to head back up again. I certainly ran it on that day, maybe might have even ran it on that day or featured it, I can't recall, but these big, and by the way, this is another example of where we would have said final third was closed out here. So this is an excellent case study in how you got out at exactly the wrong time if you followed my model. I want to move some of these things because they're just obscuring the candles, but let me just get that out of the way. So we sit at a close beneath that trough there, that point of demand. So not that day, probably that day to be fair, exiting at 10 to 4 in the afternoon or exiting at the open of this trading session here. And probably pretty happy with yourself. If you got out on that day and then saw that day, you think, geez, how clever am I? I've locked in a pretty decent profit on CAT. It was a good trade. Got out a bit here, got out a bit here, and yeah, I'm happy with that. And yeah, look at that. It's probably going to head down. And then what happens the next day? You're probably still okay. Yeah, look, okay. A little bit of a bounce, no big deal. And you go, oh gosh, should I get back in? Is this the best trading setup today? And I don't think you would have found that was the best trading setup today because you're still lower peaks and lower troughs. I mean, you've got a rally, but it's just as likely as it heading back up that you find another peak form somewhere in there. You're just waiting for that next candle for it to go. Oh, okay, well that's different now, isn't it? So that's when you're starting to sit up and think. You've got a big point of supply here. You've closed in that. I think on that day, closed above the short-term uptrend ribbon. That's probably the first day you can entertain adding some risk. I still think it's a little bit aggressive. I'd love any sort of little pullback here, any little dink back to that short-term trend ribbon, test, hold, and just confirming that we're re-establishing the trend. But, look at that long-term trend. These things can happen. And then I think that day there, you're probably not going to get your dink. You've got a little bit of one there. And correct me if I'm wrong, but I'm pretty sure on that day I ran it in the short list. And then obviously there again. Today so that's Friday, didn't do a whole lot. A little bit of a pullback today, still looks fine. I can't fault it. And if you were adding sort of risk back on this day or this day, still holding that risk. And then also from here, just waiting for the next demand side candle as well. So things can change. No system, certainly not mine, is impervious. It can get it wrong, it will get it wrong, and it will do it just like that at times. It's just the exact wrong time. But you can kick yourself, or you can go back and look at that candle and say, did I make the right decision at the time, given the evidence I had? And for me, absolutely, if that's where you got out, I totally agree that was the perfect thing to do at the time. Now, did it turn out to be perfect? No, because you can't tell the future. But how many times from that situation have you seen things get much, much worse? Okay, and that's what you need to focus on. Let us keep moving. Go to Lynn's. Actually, Mick, you've got one today, don't you? So let's do your LTP today, which is a turnaround setup. I mean, we can do this as a little bit of a case study as well. What would you be doing on it here? Well, certainly we would have identified at this stage that it's a potential turnaround setup because we've got this wonderful big white candle, massive volume. Somebody just turned up the volume on the stereo. That's what's happening there. There's some interest. I don't know, chat room, news, who cares? People are interested in this. And that's latent demand. That interest is latent demand. They might not be buying today, but they're looking at it and they could be buying tomorrow. And without that interest, these crappy little mining, I was going to say mining stock, this one isn't a mining stock, these crappy little small cap, ASIC small caps, they're going to do nothing forever. It's the one hand clapping in the forest kind of thing. But hey, this one hand is not clapping, there's two hands clapping out of the forest. We have some interest. That's no big deal. It's not great, but no big deal. It's not a deal breaker just yet. Wait and see if this was the case. The short-term trend has turned up. That's important. We've talked about candles. We've talked about volume. We've talked about interest. The long-term trend is now back to neutral. That's important. We'd like to see a higher trough formed. That's a little bit indeterminate. That's the key candle here. That sets us off again, and if I'm not mistaken, that's the day that I did run it in my list as a feature chart, so that's probably why Mick's asking about it. And then we get to today's candle as well, so hopefully you got in maybe this morning, and there's really nothing else to do here, Mick. There's just... What else would you do? Nothing, apart from FRP, of course. I don't mean do nothing. I mean, do nothing apart from hold the risk you've got and then consider adding some risk. And we don't need to wait for the next demand side candle, because that's the demand side candle right there. So that one looks pretty solid to me, and that is a feature chart also on today's candle for tomorrow's edition of ChartWatch ASIC Scans. Lynn has another one that's been in ChartWatch ASIC Scans several times over the last a couple of months even, I think. And that's SRL, Sunrise Energy Metals. No idea what they do, don't care. But I did put out that tweet, didn't I? I think they kind of got in, I don't know, was it 180 and got to 320 or something, or 160 to 320. That's a nice little double there. Full risk position today. There's nothing so sinister in that chart that says that you do anything but full risk position. I know there's a little bit of a shadow, but it's not enough to bother me. Would I add risk today? No, I wouldn't add risk because of that shadow, but I could certainly on the next demand side candle, strong demand side candle, then I could add some risk. So happy holder there. And if you're Lynn, you're looking for my blessing to get out, I can't give it to you because I can only see demand side control here. And if the demand side is still in control of your stock, why would you get out? Doesn't make any sense to me. For me, it means I have to hold on and continue to look for adding risk opportunities. Oh, but Carl's gone up so much; it doubled in price in just a few weeks. Maybe it'll double again in price. Who knows? We don't know that, but what we do know is who's in control of the price right now. We don't know who's in control tomorrow, but right now it's the demand side. So why would you sell? SMI still looks fine. No complaints. I can zoom out a little bit. I ran it, or I think I ran it maybe even on that day. I ran it, and then we discussed it here. But I can't. I know there's a bit of a point of supply up here, so. But look at the price action point of supply. So these points of supply, they're potential points of supply. They're potential points of supply. They're not guaranteed points of supply. We can print a big white candle at that level, and it tells us there is no supply there. Who's to say? Why does there have to be supply there? Now, we look at these levels because we know there's this thing called ex post regret, where people who got in there thinking it was going to the moon got stuck in it, and some of them will want to get out at that level because it undoes their mistake. They're going, finally I get to break even. Now we're thinking in a completely different fashion to these people, aren't we? We're thinking, it's in an uptrend, we want to be buying. Other people think that too. But so there's, if there's only a few people thinking, finally I get to break even, there'll only be a little bit of supply, and that's really what we want to see, and the candles will tell us that. So a little bit of supply today. I mean, that's consistent with today's candle in an otherwise strong, developing short-term uptrend, long-term trend looks fine, price action's fine, candles are fine. So no issues here from me. I can simply copy and paste that over, and I won't write next demand side candle, but the gist of it, it's still in play for adding risk. SMI. So some pretty easy ones to start me off, which I'm quite relieved actually. Let's go to COD. Coda Minerals. One I'm assuming we looked at fairly recently because we've got drawings that are doing what I quite often do after something's had a big sharp run up. And of course, we've turned up the volume again, haven't we? So this one's in play. It's got my interest. And then, we like to see this little dink, potentially even back to the short-term uptrend ribbon. That's supply-side response, and then the demand-side response to that. So we want to see where the supply is, but to find them. We want to see how much they've got to sell, how motivated they are, and that's going to be borne out in candles of price action. And then we want to see how motivated, how much demand and how motivated demand is. If supply is really motivated, and there's lots of supply, you're going to see lots of volume and some big black candles, and that's not what we want to see. If, on the other hand, demand is really motivated, it won't pull back very much, and you're going to see lots of white candles. If they're both motivated, you'll see all sorts of candles and lots and lots of volume. That's how we can tell. But look, it's a tricky one. I'm going to say supply is quite motivated here because off a high of 20 and a decent shadow there, then that candle there kind of killed it. And holding though at 12. All we need here is really, we've kind of done that bit, haven't we? So if we put that bit there just to illustrate what we need next, we've kind of done that bit, and now we're just really waiting for that bit, aren't we? So a decent white candle, maybe even a little bit of a volume push to tell me we've at least taken out some of the latent supply in the system. Will there be latent supply in the system? Well, were there a bunch of people that got in this day? Look how many people got in this day. Probably quite a few of them at the top, and by this day they were kicking themselves. Oh, I always get in at the top. I was supposed to buy it at 10 cents. My mate told me this one was going to the moon, and I didn't believe in. Damn him. Oh, and then I couldn't take it anymore. It went to 10.5, went to 11, went to 12.5, and I was kicking myself. I was swearing, I was cursing, and went to 15, 16. Oh, I got to 20, I couldn't take it anymore. I just had to buy it. Oh, and then what happened straight after that? 19.5. All the supply on the market depth, I don't look at market depth anymore, but I spent many, many years looking at it, piling up at 20, and then 19.5, 19, 18.5. Oh my gosh, I've done it again. So those people, where there are lots of them, we know that because there's lots of volume. Was it a violent reaction? We know that, the price action. There's latent supply up there. So if we can get the next push, and this is the point, there's usually a point somewhere, isn't there, ladies and gentlemen? Somewhere I have a point in my ramblings. And the point is thus. Lots of volume. That sort of price action means lots of dead wood up here. So if we can get the next push with a decent whack of volume, it's telling us that we've removed some of that latent supply from the system. So you'll often hear, you want to see a new leg up started with strong volume. Okay, well, that's a textbook, but did they ever tell you why that's the case? No, of course not. But that's kind of why we want to see this is, well, we know there's latent supply. If we can show lots of volume on the rise, because don't forget, lots of volume is lots of buying and lots of selling. That's what they don't tell you in the textbook. So, you want to see it going up with lots of volume. That's just stupid. That means it's going up with a whole heap of people selling like crazy. You actually don't want that. But it's okay to have that scenario at turning points or at breakouts. They're the two places you do want that volume showing with a nice demand side candle. Because the demand side candle, white candle, tells us, yes, demand was there and it was motivated. The length of the candle is the demand side's motivation. And the amount of volume tells us, well, how much supply did they clear out the process? And that's what we're looking for. Now, once that move has started, you actually want to see small and diminishing volume. Okay, as little volume as possible, and I'll let you think about why that's the case. So this textbook technical analysis of you want to see something going up with lots of volume or increasing volume is bullshit. It is the worst piece of technical analysis advice that was ever devised. And my theory on this, and I've been around for over 30 years reading technical analysis textbooks, is that somebody thought it was a good idea back in the 70s, and it just got copied and reprinted in the 80s, the 90s, the noughties, and since the noughties, every dud YouTube technical analyst that thinks they know what they're talking about is repeating it. They just never sat down and thought about it for 10 seconds. That's what I tell my kids. Before you do anything, sit down and think about it for 10 seconds. It'll change your life. But I digress. Let us keep moving, because I think I better get to you on my request at some stage tonight. But we are not going to do that just yet. We're going to get, because I'm sure some of this is modestly instructional. What did I say on Coda? I think you know what I said, what I want there, Craig. Let's go to Alan Scott, JDO, Judo. Now, what are we doing here? Alan, I was in plus 1/3 on Thursday. I didn't wait for the retest of the short-term trend ribbon. Don't know what that means. Didn't happen today. I don't know. There's lots of words on this, Alan, but I'm not seeing a lot of reason to be in this stock. Assuming I've got the right code, JDO. You've given me a paragraph of analysis, but where's where's the setup here? You know, is that your definition of a setup? And I get it, like it's pulled back to here. But what about this? Doesn't that worry you at all? What about those? The severity of this, I think, and the lower peaks, and even if that's your signal, and I do feel that that's a signal in itself, because you've got a really nice candle coming back, testing, holding short-term uptrend ribbon. Yes, you've got a long-term uptrend if you squint, but you don't have price action confirmation yet. I guess maybe that's what you're saying is a dink. There is an intraday dink. But let's zoom out now and say, well, on that day there, the 10th of September, was that the best setup you could find on the entire ASX? And I don't think it is. So I'm not going to spend any more time on that. I'm going to keep moving, and I'm going to challenge you to only find the best of the best and not muck around with Mr. or Ms. in between. And I think that's what this setup is. Let's go to your next one. We do have some better luck here on MMI. Alan's saying he's also in this one. Well, that's good, because this is a nicer trend, clearly. A little bit sketch-rama in terms of it's, you know, the candles are not clean and pretty, but they're doing the job. Okay, it's a steady trend. That's fine. Would you minus a third if it closed below the previous point of supply at 8.1? No, I can't see any points of supply. Let me check this one for you here. Maybe this is the one you're talking about, and that sort of sorry, I just need to do something, because we don't want that interrupting our webinar, do we? So we'll get rid of that one. I can't see any major points of supply there that you need to be concerned about. It's like one of those COVID things, isn't it, where there's always a cat walking into the shot. That high there is 9. So no, I can't see your 8.1. And sometimes that's the problem with emails. You can't have a two-way conversation. The bottom line is I can't see any reason to minus a third this at all. That's my point. And if I can't see any reason to minus a third, that by definition must be FRP. And I'm going to go plus 1/3, because it's the last candle is demand side. The trends are amazing, and everything is looking very strong to me. I don't need to write next demand side candle, because the last candle is the demand side candle. So I'm very happy with that one. Give it some more room. Yeah, give it some more room. If I have time, I don't really have time, but we can do it anyway. BCI Minerals, I put this in tonight's shortlist. I didn't feature it because, again, the candles are a bit sketchy, but it's looking okay. There's a little bit of volume there, maybe almost double the average volume today. If I zoom out, there's some potential there. Look, it looks okay. I didn't get featured, so that means I don't think it's the strongest setup out there, but it certainly deserves your consideration, isn't it? And some people might say, well, this is same cat, different problem. That's my chess set there. Quite an ornate, expensive chess set in my study here. And I think she's losing interest, or she's about to do some serious damage. I've got two cats. This is the one that's most likely to do this. The other one will be asleep somewhere. Okay, happy with that one. I won't write on the screen, but plus 1/3 FRP. Christine, E25, moving through them, trying to move them a little bit quicker here. And this was last week, so probably there. And it did look much better there than it did here. It hasn't really done a whole lot since then. I think if you're in, I think it's still just hanging in there. I don't want to see it close beneath here. And it's just a sketchy chart. So when they're this sketchy, and I'm going to guess pretty thin as well on the volume, you get these moves with the candles, unfortunately. I can go FRP for now, but just watching that level there, okay? Okay, I should clarify this. Christine's talking, and maybe this helps a little bit, she's talking about it on a weekly interval, and that's does change the analysis, because if you are talking about on a weekly interval, you wouldn't look at the daily chart, and you can see straight away the candles become cleaner. And the goal here is just to look at the market literally once a week, which probably suits a lot of people out there, certainly suits Christine. it automatically makes you a longer term investor, but you do everything else exactly the same. And for me, there's no need to look at the daily charts anymore. You simply look at these. That's your style. You stay consistent with it. So to change its context a little bit, Christine's saying it's an aggressive setup now. And it is an aggressive setup. It's actually, it's almost a textbook aggressive setup. We're seeing a nice base pattern tick. We're seeing the short-term trend ribbon, and it's a short-term trend ribbon, but it's on a weekly chart, but it's still a short-term trend ribbon. Tick. Short-term trend ribbon is offering dynamic demand. Tick. As of that candle there, we're seeing some nice candles. Tick. We're seeing the price action change to high peaks and high troughs. Technically, yes, it has. Yeah, there's a trough there, and high peaks. Tick. So, Christine, you've nailed it. Yes, yes, yes. This is this week, so that would have been last week. Yes, so you would have had that candle. There you go. So that's the candle that has happened. We didn't do last week's session. That's today's candles in this week's candle, but only today. So that's what Christine's looking at. And if we go back to there, and I think this is important for Christine, a few of you sort of nodding your head now, go, oh yeah, I get it, Christine. Actually, that makes a lot of sense to me now. That is actually a textbook aggressive setup. So yes, for me, based upon the candle last week, and I would have said, look, FRP, if you've got it, you're entering above the weekly high this week, 2 pips above is this typical way of doing it. And then you got this candle, which didn't do any of those things and probably nullifies it for now. So next demand side candle, again, doesn't mean that this story's over. It just means pulling back. That's what happens. We saw how illiquid it was on the daily chart. Just keeping an eye. We do want to try and make one-to-one into that trend ribbon because we know the trend ribbon can impede the progress. I'm not sure if you're going to get it, but I don't have enough time tonight to calculate it. But I agree with your methodology and what you're seeing there, Christine, because your question was based upon last week. You do say that you acknowledge that I say don't look at the daily charts, and then you go on to say that you'd like looking at the daily charts. Well, that's just fine with me as well. I don't recommend it, but I was going to say I'm not going to tell you not to do it. No, I will tell you not to do it. There you go. So don't do it. But if you're going to keep doing it, that's your choice as well. Okay, I don't mind, but I wouldn't recommend it. SB3, Christine's saying that it helps her time for the fine tuning of the entries. And I get what you're saying, but I like consistency and I prefer only to look at the weekly chart. And again, another aggressive setup here. Totally agree. All the hallmarks. The only difference between the two is this one is already interacting with the long-term trend ribbon. A word of advice on that, because the risk is that it obviously hits that and then comes back down, throws in a supply side candle. This candle is today only. That's all we have of this week. But as of last week, very strong indeed. And this is the candle that Christine was looking at. So it's all doing the right thing. But the long-term trend ribbon is the problem now, isn't it? And we've talked about this several times as well. Once you're in the ribbon, it changes the reward to risk. Because when you're beneath the ribbon, and let's say from here, and I know here is not a setup, it's not, but just pretend it is. Pretend it is for a second. Here, if we're getting in here, we've got that much upside, and if we look at, say, the last trough, we've got that much downside, and we could see that upside is greater than downside. So that would be fine in terms of reward to risk. As we start to get closer, that dynamic is going to change. So we sort of get to here, and maybe under there. Maybe we're just squeezing that in. Probably are, I don't know. And look, close enough is good enough for me. Once we get to here, now we're in the ribbon. So how do you play it? The ribbon is the I guess the zone of dynamic supply, and where does where do you start it, or where does it start from here? It's all here. I didn't explain that well, but I think you get the gist of it. Look, when you get to the top of the ribbon, all right. So when you sort of get up here, sort of in these areas, there's less ribbon to worry about, isn't it? So you're more likely to just take that signal. I've drawn a line at roughly the halfway point. It's the balance point. And you could say, well, above that, there's less ribbon to worry about than there is to worry about. Right now, you're still in that zone where it's a bit tricky. And this is the game. And you can say, Carl, I don't care about your ribbon. And that's fine too. I don't care what you do. But I'm just telling you what I do. And I'm still worried about the ribbon, even though we've got great candles into there. Probably a really good case study, and it's not weekly, but MPW was a good case study, and I put it in. I watched it. I watched this like a hawk, and I wanted to run it all this time here, but I don't do aggressive setups on the website. And it certainly qualified several times through here, but I ran it on the website, I reckon on that day there, because that's the first day it closed above that halfway point, close enough to the top. And it really hasn't looked back since then. So I don't know if anybody got on that trade, but if you're getting in around 3 and now it's close to 450, that's a decent trade. And that's a good example of just that, just using that balance point of the ribbon, because it changes that reward to risk calculation. But interesting little setups there, Christine. And what I really like is your understanding of the aggressive setup. I think that's really neat because it's one of the hardest things I think people have in these sessions. So well done on those. Hayden's got, this I promise this is the last offline request, Hayden's got 4DX, which that's the weekly chart. Let's go back to the daily chart. Obviously it's done very well. Hayden's saying he entered on the 21st of August, took a third of a buy, which is on that day there. Good, yes, I probably ran it on that day. Took another third on the 29th, which I'm guessing is that candle there. It is indeed. And obviously then it went absolutely ballistic, which is wonderful. I'm so pleased. I have heard from several people who have said similar things about that, with some crazy amounts of money being made. If you didn't get it, don't feel bad. There's plenty more out there, and they will come. Keep the faith. But he didn't enter a final third. Well, I definitely ran it on that day. That would have been the day to do it. That would have been a day to do it as well. Although that would have been a day to do it, if you're brave enough. Took some money off the table on the 3rd of September, which is, here. Here. Okay, so that I take umbrage with. Why would you be taking some money off the table there, except for $1? If you took a third off for the $1 round number, I can see that's it. Although he says previous point supply at 120, perhaps, which is, okay, yeah, that's, no, where is it here? 120, 110, 120. You can make anything up, I guess. It's 127. So, look, all I'd say here, Hayden, is either your numbers that you've given me aren't accurate, or you're just kind of making stuff up. So have a journal, write down what you were looking at, exactly like a date, that's the point of supply, and that's why I got out, okay? But even so, round numbers, we don't have to ask questions. We don't need to wait and see the price action. You can if you want. But certainly points of supply, for all the reasons we've talked about before, they're potential points of supply, I guess, size of round number. That's just the way I do things. But wait and see what the price action is there. And my point is that the price action on the 3rd did not warrant taking anything off the table if you waited for a point of supply. If you did it for the round number, that's different. But if you did it for the point of supply, no, I don't agree with you. If anything, we should have been adding risk on that day. That could have been your third, your plus 1/3 on that day. You did say maybe that was naughty. Is that the question? I've answered your question. That was naughty. Yes, taking risk off on that day is naughty. Said he's still holding a third, which... Yeah, look, I don't think you need... Look, definitely a third off on that day, 100%. Definitely a third off on that day, 100%. So I think you've got a third left. Yes, I agree with you. Okay, we're on the same page. Where is that third coming out? Close beneath that. Do not pass go, do not collect $200, no questions. And if you're a little bit more aggressive, you could even go to day's low as well, close beneath that. But this and this, I don't like. So happy to hold a third. I think that's actually a very sensible place to be, and hopefully that helps a bunch of other people as well. Okay, that's all the offline requests heading to you very, very patient people online. And Adonis has got CBO. Just give me a thumbs up if you're still there and you're still conscious, please. Good, okay. Hopefully that wasn't a complete waste of your time. I think there were some interesting case studies in there. Thank you everybody for your extra thumbs. Cobram Estate, I still think looks very strong here. This one is for Adonis, and he's got Ampol as well, consolidating here before going high. Yeah, I don't disagree with that. Pretty happy there, happy with that. Of course, I'm talking about the two downward pointing shadows. A little bit of supply in the system. I don't think it's a big deal considering what's come before it. However, what we do also have now are two pretty decent candle lows, don't we? 2 decent candle lows where they have the market has demonstrated significant demand side control, excess demand. Certainly that one anyway is a point of, well, is it really? Because that's not really a downtrend. So there's your clear level there. And really all we're mapping out really are points where we would start to manage risk. So minus 1/3 close below on that one, and then minus 1/3 close below on that one. And don't worry about the other third. We'll probably get a signal, a big candle, or something else will happen, certainly before we get beneath here to tell us about that other third. And if it's not, we've always got the final backup there of that short-term uptrend driven. So I think we're fine until then. I'd actually be more inclined to add risk to this one, if anything. I know this little pullback sort of, well, see, this is not a peak here because that's an outside candle. So really the last peak is here. And even then, that's not the peak. That's the peak. So we're okay. We're actually fine. This is absolutely fine. So I'm FRP. I'm plus 1/3. I'm happy with that one. No complaints. On Cobram, let's go to ALD. This is a little bit disappointing because this is a fantastic signal as far as I'm concerned. I love this. And then, you have the weight, and then that's the one that really interests me. A little bit of a flame out, isn't it? At the point of supply, there you go. Now we know there is supply there. But this is all very orderly, and this is coming in pretty soon, so I'm pretty happy with that. I'm still FRP here, and I'd go so far as to say on the next demand side candle, I'm still happy to go plus 1/3, I think. Wrong chart. Yeah, wrong chart. That's Allied Gold Mining from 2012, isn't it? So I had to flick down. Well, now you know how to analyse that chart from history, ancient history. Ampol is still looking good. We got that. We do have a gap. Funnily enough, it's actually not completely different, is it? But okay, yeah. And I'm going to end up writing the same thing, FRP and plus on the next demand side candle, plus 1/3. So no troubles just there. In terms of where to manage risk, obviously that's an important point of supply just under there, point of demand, I should say. And I am rushing, and that's why I'm making mistakes. So apologies for that. But Thomas will do your US ones shortly. Hayden asking about LTP, but also I've talked about that as well. So I think we can move on. FRP, yes. TEA also came up in today's scan, and it came up as a feature chart as well. So that's highest conviction. For obvious reasons, looks amazing, plus 1/3. The only thing I'm worried about is that thing there. And it definitely got shortlisted, and I had to think a little bit about whether to run it as a feature. And that candle ordinarily is something that would concern me. It's big, it's black, it's got an upward shadow, it's pointing into $5, a round number, and it's on more than double the average volume, price, action, volume, volatility. 3 sort of tent peaks there for reversal. But then nothing happened after that. Absolutely nothing happened. And up we go again. And we actually closed inside the shadow, so I think we're inside where that supply started to come in. So that's some of the reasons why I chose to run it as a feature chart for tomorrow. Plus 1/3 FRP. And Hayden, there you go, also pointing out that big black candle, and it has been consumed. I love the language. I love the how good's that? The jargon, consumed. I love that. Yes, I agree. Avant saying, hi Carl, can you please look for VE? Because that's exactly what we're waiting to happen, isn't it? There is supply there, it's latent supply. We're waiting for it to be consumed by the demand side. Wonderful, wonderful, wonderful. Avant saying, hi Carl, can you please look at VE, which I think is looking very good. I nearly ran this as a feature today. I just held back partly because of the big latent supply signal that we're waiting to be consumed as well. And there's that big shadow there and a really sharp pullback. And those worry me when I see those. Like, why were you there? Why did that happen? And I get it. Came back to there, did everything else did perfectly the way we want it. But it still happened. And that's why I might just downgrade it a little bit compared to something else. And why those other things tend to get featured instead of this one just only got shortlisted. But if it's in the shortlist, You have to understand, if it's in that shortlist, it's still FRP plus 1/3. You're not waiting for anything. It's good to go for me. But it's just about comparing setups and finding the strongest ones. So you can see this is more of a turnaround play, a little bit of more risk there, and this latent supply up here is my issue. That's my issue. Okay. Thank you, Avant. Let's go to Peter. Please, I know I didn't give you a lot of time, but don't put any more in. I can see Perry's US stocks as the last ones I'll do tonight. Peter's got DXB, which I haven't looked at for a while, and there's a reason, because it's, it hasn't been doing the right things. Let's delete all these. We don't need those historical ones. Trying to get itself back in the game. This is encouraging. Okay, but we also talked about earlier on not messing with it, Mr. In Between, and I still think this one's in between. How do you know? How do I know it's in between? You know what? I don't have to make this stuff up. How do you know it's in between is probably the better way to put it. Well, look at that moving average. It's orange, and there's another moving average inside there. The short-term one, you can't even see it because it's orange as well, and that's probably the best way to determine that it is Mr. In Between, and therefore. Sorry, Peter, I'm not gonna mess with it. FXG, however, is not Mr. In Between. The traders here have made their minds up, and that's the thing. That DXB, yes, it's starting to look better. Yes, maybe some demand side control coming in, but there's still too much inconsistency, too much indecision. Some traders think it's great, some traders think it's terrible. Whereas you look at something like this, and we can see how the market is moving towards this idea where everybody agrees it's good. So happy with that one. Would I buy it based upon today's candle? No, I wouldn't, because of the upper shadow. Is the upper shadow something so sinister that it would cause me to manage my risk? Well, I can't see any round numbers. It's not even that much of an upper shadow, is it? There's still a white candle by the end of it. So no, I'm still FRP. I'm not a third, plus a third on that candle, as I said, but the next demand side candle, I could entertain it, but only until then. And this one's been going pretty well. I'm pretty sure I featured it. Maybe it became a feature trade on that day. I'm not sure. Okay, let's go to, and Peter saying very similar things to what I just said there. DSV on TSX, we'll do that one later. We've talked about CAT already, Michael. Who's saying, hi Carl, what are your thoughts on applying these trend ribbons on lower time frames? Yeah, they just like you can apply them on higher time frames, you can apply them on lower time frames, and you go check, don't just take my word for it, go have a look. They will do much the same things. Why do they do that? I don't know why, and I don't care why. They just do, and use the same system: price action, candles, trends, and you should get similar results. I say similar because when you get to lower time frames, your candles aren't as clean. I mean, you can't get as clean candles on a 5-minute chart, because you just don't have the time for those things to kind of play out. As you get to longer periodicities, I know they're all intraday, you tend to get cleaner candles that make a little bit more sense for the system. But otherwise, trends and price action still roughly do the same thing. But, short term, you're going to get short-term trades. You're going to get trades that don't last days and weeks. You're going to get trades that last, hours or minutes sometimes. I don't mind. Play around with it, prove to yourself that it works by doing a bit of back testing. Go get these intraday charts, scroll back as far as you can to the left and work your way to the right, much like we do here, and I'm sure you will find that they do largely the same thing. So for people that are good at computer programming or good at just writing chat GPT prompts to write code, MetaTrader 5 more specifically is probably one way to go, where you can, if you've got some ideas and you think you can frame them to the AI, maybe it can write you some code and throw you some signals or do some trading for you. But I'll leave that to your own devices. Peter's got a session or two ago, someone new, I think, asked if participants can communicate outside the sessions. Someone responded, no, that's not true. Talk away. I don't care. You can talk as much as you like. Preferably don't talk in the sessions, because the only facility we have is this chat window. And if you clog this up, then it makes it really hard for me to do my job in these sessions. Now, if you want to share email addresses, you can do it in there, but understand there are other people can see it, but it's a pretty close group. It's not open to everybody in the world. Okay, it's just people who have come across me. So I think it's fairly safe. I don't think there's any crazy people out there. Notice I use two crazies. But that is your choice. I don't care. You guys can do whatever you want, and as long as you're all very, friendly and pleasant to each other and help each other, I'm cool with that. Okay. If you want to involve me, involve me. If you don't want to involve me, don't involve me. I think we're all on the same page on that one. But yes, I see again. You just don't clog up the chat window. Robert saying your thoughts on LKY. Potentially minus 1/3. Yeah, look, it's a decent candle today, isn't it? It's only one candle though, but it is decent. Let's just have a quick look-see out there to see if there's anything that might be causing that, or there's an old point of supply that might have just tipped the balance there and caused that supply to come in. There isn't. 50 is one of those numbers in Australian stocks, 50 cents, of course. In America, 50 cents, what's 50 cents? It's a penny dreadful. But here, particularly if something spent a bit of time at 25, like this one did, double your money. Everybody you got in this day let's think about this. Literally, everybody you got in that day, they doubled their money at one point today, didn't they? So that can cause your point of supply, just in and of itself. And until you get to the end of the day, you won't know what the candle looks like. But you get to the end of the day, you go, you know what? There's a bit of supply in the market. Volume wasn't that impressive, though. I mean, it wasn't like everybody got out to people that were getting in. I'd be inclined to give it another day. Everything else is very, very strong. I'll leave it up to you. What you could do is sell a smaller amount than a third if you wanted to, just to scratch that itch. Often that helps, But let's face it, that candle implies a higher probability of seeing another nasty candle. And do you really want to wait for that to then do it? So you're balancing this risk of wanting to lock in some profit at a good price against the risk of not being in it when it goes again, and it probably will. That's what we can say based upon the candles. It's a decent candle. It's a decent candle. It's long, and that's a long shadow. Didn't close near the low. You can see I'm in two minds. So if I'm in two minds, you're going to be in two minds. That means there's no right or wrong answer. Do what makes you feel comfortable. Okay, dare I say, just to scratch the itch, minus a third, which in brackets means we're still plus 2/3 here. And that's our whole debate, isn't it? That's our whole debate. And I think when you frame it like that, the debate is easier to conclude with yourself, isn't it? Not win. You can't win with yourself, but conclude with yourself. And I think that's pretty neat, because a lot of other people are struggling with, do I have to get out now? Because they're all in and they're all out. We don't have that weight around our neck, do we? BML, which is not that one, is that one? Oh, that was a Bank of Melbourne. How about that? Looks fine. I know another supply side candle there, but compare the supply side candle here with the supply side candle here, right? They're very, very different. That one has you having a big debate with yourself. This one here, hopefully, there's really no debate. I don't see anything so sinister about that I need to take any action. If there's another one tomorrow or another one after that, then it's starting to get my attention, but I'm pretty happy with that. And unless there was something that looked like this that it was happening at, and it's not, and there might be something silly or little in there, but I'm not worried about that. So that's fine with me. FRP on that one. Sue's got, hi Carl, hope you're well. I'm well, thank you, Sue. Can I please get your thoughts on 4DX? That's good. I think we did that one, a whole case study. IPX, which is that one. A little bit of a pullback to the light green ribbon, isn't it? And that is not a nice candle. I don't like that candle. I definitely don't like that candle coming straight after it. No little white body, but I don't like that upper shadow. In fact, it's so tiny. Big washout, average volume, but big washout, and then just no demand side response. Actually, yep, that's the one. I'm just trying to match them up. Average volume, and then that's this upper shadow here. I know this is good. That's okay. What we can do, I think, we can do this. Okay, so I think a close beneath there. I'll repurpose that arrow close below. I'm just going to put manage risk. So just question mark, obviously minus the third. What stage you're at, I don't know. And the reason I'm writing that is because I feel that we should already be minus a third. on that one. All right, I think we're already minus a third on that one. And then we're going a bit further here. And depending on the candle, maybe do a third, you know, you can do like a third. Well, you do a third if it closes below, and then if it's a really bad candle, that might be your last third. Now we're going to go to, how are we going for time? Awful, as usual. CYL, not as bad. Again, look at that. So there's a big difference though. Look at that candle there, and then look how it came back from it. Like that's, if you're going to have a big black candle, that's the way you want to come back from it. So that's a big tick for CYL compared to IPX, where look how we came back from that one. We really didn't. Okay, so I'm treating these two differently. This last pullback, it's not that sinister. Today's actually not a bad day, given that gold stocks crapped out. This one did all right. It's holding that. I'm okay with this. We still have, obviously, that level, which I think would be sort of a double risk management section, because we've got that. We've got the short-term trend ribbon. But I don't think there's anything in there just yet that's too concerning. So happy to stick with it. So just noting short-term trend is still very strong. Long-term trend obviously still very strong. I can get rid of that one. I think we can say close below, just to annotate this properly. Close below, and we're just going to go manage risk, and we're going to query 2/3, I think, on that one, and query 2/3. But in the meantime, based upon everything we can see, FRP is still the way to go for me. Okay, getting pretty close here. Rishi's got SGQ, another one that's doing pretty well. Obviously, FRP plus 1/3 last time we looked at it. FRP plus 1/3 a couple of times ago we looked at it. It's a nice breakout above points of supply. It is approaching a pretty decent zone here. That is, I think, worth looking out for. So let's go there, and draw that across. So we're pretty close, aren't we? So I would still wait and see what the price action is there. But let's go question mark query here. So question mark price action for minus a third in there. In the meantime, there's absolutely no reason to do anything but hold, because today's candle is perfection. So it would be still FRP for me. I know it's in tonight's or tomorrow's list as a feature chart, because I don't do reward to risk. It would take me too long to go back and look at all these things, and too complex. It's just not what I do. You guys know how to do that, so I trust you with it. So in theory, it's a feature chart, but I don't think I'd be adding risk here just on that. So I'm just going to go FRP, if that's okay. And we're just watching how it goes there. Obviously, if you're starting to get above, say, 9.5 cents, then you've got a 10-cent round number there to contend with as well. So just keeping an eye on that. Hopefully, Rishi, you're doing well on it. GCM also popped up today in terms of price. Didn't hang in all the way there. I'm going to put this in Mr. In Between, and straight away I'm going to filter that out just on the short-term trend ribbon. So I'm not going to talk about it anymore, so I don't need to. I'm just going to spend time on the ones that deserve them in this session, because time is at a premium here in these sessions, everybody. So it's not me being rude. I think it's just me being astute with our time. Perry's got WGR, which is that one there. Actually, I haven't seen it because it's not coming up on my turnover filter. That's the problem. Is the problem for me. It's not a problem for you. It just means I haven't seen it. But obviously it would have been in before. It would have been in here, because that's a perfect setup. Probably here, very close to a very perfect setup there. And certainly here today as well. So, yep, very easy. FRP plus 1/3. No need to wait on that one. Western Gold Resources. And as soon as it meets a turnover filter, you start to see it in those other scans. Thanks for that one, Perry. Second one here, DTR, which is in the list, and it's just perfect, isn't it? So, oh my gosh, what a chart. Let's go to the weekly. Is there anything there? And there isn't even anything there to worry about. So this is now the perfect chart, isn't it? So I'm expecting we've got a few people on this one, simply because it's been in the watch list so many times as a feature chart. from such a low. A few people are happy with that one, so that's good. And the key here, I hope the key here is that people are still in this one. That's the key, and still prepared to add risk. I know it's hard to do, particularly if you got in like at 10 cents or 4 cents or something. It seems crazy to add risk at 30, but it's as crazy as that chart. And if you saw that for the first time, would you add risk? Of course you would. So if you're seeing it for the 40th time and it looks like that, what's stopping you from adding risk? I know it's famous last words and everything, but there's still a model, there's still a way of thinking, and you've got to be consistent with it. And if you're not adding risk at this point, then you're not really being consistent with the system. CVL is definitely on the list as well. Thanks, Perry. That is in tonight as a feature with gap and run and closing above points of supply and just trends going vertical. It's all the stuff I like to see. Big volume push there as well. So very, very happy with that. Featured. Thanks, Perry, for those three immaculate charts. Rishi's got ION if I have time. Don't worry, it's not that one, so I'll give him the benefit of the doubt. And look, it's not terrible, but it's also not good enough for me to spend any time on in this session. Not terrible. When it starts to do stuff like this, Rishi, and throw in some nice white candles, maybe a little pickup here, ask me about it again, and I'll spend more time on it. But that's what you need to look for. Until then, I don't think it deserves our attention. Michael's got DAI, which certainly deserves our attention. And I feel like this was in the offline request that I've missed it from someone. But somebody did ask about that. So I'm glad you brought it up. Okay, so how are we going to deal with this? A little bit of supply coming in here for obvious reasons. And we are seeing it just start to manifest there. So today's probably not the candle that deserves taking risk off the table, but we're going to be really attentive, I think, on tomorrow's candle. If we start to see sort of upward shadows, black bodies there, then I think you can just knock some off, and it's just a precautionary measure. So let's just go query this one, minus a third on this one, just on the basis of the MPOS, the major point of supply, and that's all we're talking about. That's all we're talking about. We're still plus 2/3 because we want to see this spend just a few days there and cause us to add that risk back in at 106 because it's on its way to $2. But everything else is perfect. Everything else is perfect about this one, and that's why I would hang in. I really like this one. I ran this as a feature, didn't I? Just on this candle here, if I'm not mistaken. And I think I ran it here. Did I? I think I actually ran it here, didn't I? How many people got on after that candle? I ran it there. I reckon I ran it there, and I ran it those three, and I don't know if I ran it there. So if Hayden got on. Hayden's really thumbsing up that one. So he got on that one. Yeah, that's a nice little turnaround play. So yeah, nice return on that one. Michael got that one as well. Okay, that's it. We're going to US stocks now. Perry's got some, and then we're going to head back up the list. Thanks everybody for being so patient. But I got to all the onlines and offlines, didn't I? Let's go to Perry's first US stock, which is LAUR, Laureate Education. Oh, that's a very pretty looking chart. Let's head over to the weekly just to see if there's anything out there in the corner of our eye that might cause a problem. There doesn't seem to be anything at all. It's all blue sky from here. And then with, looking for my arrows here, there we go, with that perfect set of trends. Oh, I see what's happening there. We've got, this TradingView does this silliness here, object tree visual order, bring to front, there we go. And we'll get rid of that one. And we have to do it down here as well, visual order, bring to front, there we go. Price action is rising peaks and rising troughs, so I won't draw it. And perfect candles. This is the perfect chart. So if we were doing, if I was writing a book on trading and trend following, this is the chart that I would use as a case study for what the perfect trend looks like. Plus 130 FRP. And we'll click save on that one for next time. Thank you, Perry. Going to your next one, which is IREN. Same again, even steeper. So arguably even better than the last one through that point of supply, which might even be its IPO. So no objections here at all. It just looks like you might say it's stretched, but I don't see it as being stretched. I look at this little pullback here. Look at this dink here. Look how much it's gone up. And this day here is all it could pull back. and then it wants to do that on Friday. It's just like see, some people look at that and say, oh, that's gone up too much. If you had to describe it as a spring, would you say the spring is coiled or the spring is extended? So I look at that, I say the spring is coiled. That there, just snapshot that. Call that the coiled spring pattern. That's the coiled spring pattern right there. It's just getting ready to launch. So I'm happy with that one. Big candle, small candle, downward pointing shadow, and then another just a push candle. All right, doesn't have to be big, but just like the supply side is just losing their grip on this one, and demand side is so strong. So definitely a very pretty little set of candles. FRP plus 1/3, and I'm pretty sure it's not in any of Steve Nissen's. He's of course the quote unquote expert on. Let's go not there. Let's go browsers. Now I'm back. There we go. The quote unquote expert Steve Nissen, which I'm looking at my bookshelf here. I've got a couple of his books there for sure. On Japanese candlesticks, ornamental. AU, AngloGold Ashanti, great code, isn't it? Very, very strong. Unlike our crappy Aussie gold stocks, which all crapped out today, this one is doing very well. FRP plus 1/3. And you're probably just better off just playing US gold stocks anyway, aren't you? Just go back to that last one and just make sure that I saved it. And we're going to Perry's fourth one, which escaped that out. So now I'm drawing on the screen. WT, Wisdom Tree. Well, that's a coiled spring of it in a different way, isn't it? There's this pattern here, coiling literally, and then bursting out the top. We'll check to see if there's anything sinister going on there. There isn't. And therefore, with everything else looking perfect, we're going to go plus 1/3 and FRP. And save that one away. Thank you, Perry. I don't think we had many other US ones here, so we're probably very close to finishing. I know there was the Canadian one, which I'm trying to find. I've lost it, but I will find it. So bear with me. I know it's dead air. Sorry. That's a cat. Same cat. I left my office door open. It's my fault, because that is an invitation to come in and while I'm working get some pats. TSX, DSV, there we go. DSV on the TSX, DSV. Discovery Silver, okay. Well, hey, we're all looking for silver charts right now, aren't we? And that's a ripper. So that was worth the wait, I think. Very happy with that one. And I hope you don't need me to explain why, because we've just spent over an hour doing all that stuff. I should be fine just writing FRP plus 1/3, because these are great charts. And for a few people tonight that had those Mr. In-Betweens, you can see why we don't need to spend time on those. We want to get here. We want to find these amazing charts to trade. Thank you for that one, Peter. And we're going to finish with Adonis, who's got AAPL. Yeah, fascinating. I haven't looked at this chart for a while, because it hasn't done a whole lot for a while, but starting to look good again. But a little bit of mixed price action here, sort of just pulling back into this area. So we've got a little bit of a point of demand, and point of demand here, old point of supply should act as a point of demand in the future. Again, point of supply acting as a point of demand, and it hasn't. Some decent candles here, a little bit of a gap and run. Look, it's come back well from it, but for me, it just still needs to do a little bit of work. And then, obviously, that point of supply, that point of supply, that point of supply. So there's a bit going on here. We can see we've looked at it here, FRP plus 1/3, but on that candle, it's sort of starting to get really, really interesting. It hasn't really gone on with it, and that's a bit of a concern for me. Look, if you've still got it based upon that, certainly I can hold on, because there's nothing in there that's telling me not to continue to have some risk on this. But it's not the most exciting thing necessarily, I think, to add risk at this stage. Now, another decent white candle pushing into 240, it's going to start to look better in its own right, in isolation, but then comparing against some of the other ones we've seen, whether it would push its way into, say, a top 3 or a top 5 on the day, I'm not so sure. But happy with that as an FRP. JPMorgan is the second one, and that looks very, very good. So this one, actually, we can copy and paste from last time. So FRP plus 1/3, perfect trends, doing exactly what it should be doing. And then the final one here from Adonis is ORCL, which has been in the news lately, hasn't it, for its strong performance and strong results. Obviously, gapping there, pulling back. These two candles would warrant just a little bit of caution. I do think at some stage we're going to get, even if it's tonight or the next night, a downward pointing shadow where that's this selling, that's this profit taking that's in the system, washes out into buy the dip. And when you get that downward pointing shadow, nice white close, that would be the signal for me. But with just two black candles to look at, or the last two candles being black like that, not much to do right now. Would I take profits based upon that? No, I actually don't think I would, because this is still a relatively mild push. I don't think it's beneath the balance point of that move, so halfway. So happy just to see this one play out. Look, if you were so jittery to take a third off the table, but even then, I think I'm still hanging in there on that one. I think that's it then. So I'll just scroll down the bottom. I think we're okay. So I think I've got everybody's requests. I might have missed one there on IEL. I'm not sure. I just sort of saw that. And I'll just do this very, very quickly. It's actually a really interesting setup, isn't it? I think there's something in this. And I'll leave this one for your homework as to whether it's an aggressive setup. But I think there's something in this. The only thing that's just holding you back is just a little bit of price action. But today's a nice candle off that that short-term trend ribbon. So even just any sort of little dink from here is going to start to look interesting, but then you've got the long-term uptrend ribbon. Okay, let's head over to here and remind everybody that everything we've discussed tonight is general in nature, has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon it, you should consider it carefully or seek the help of a financial professional. It's important to speak to those financial professionals, everybody. Ask them about the PE ratio, ask them about the dividend yield, ask them about what they think their long-term prospects are, if it's good value or, great management or, I don't know, enterprise value to EBITDA is looking good, because they're going to give you some great insights as to what you should do with your money. Of course, whoever you listen to, it's important to remember that trading investing is risky, and it's you and not I, or them. I guess they're definitely going to say it's not them who's responsible for everything you choose to do. And on that cheery note, everybody, it has been a pleasure chatting with you this evening. Hopefully you enjoyed the session, and we'll catch up again next week. So all the best if you're trading. Till then, bye-bye for now.